Hi, Warriors. Let's have a good day. Patrick, Richard, Bran, AJ, Shahab, how are you? Okay, so we're getting some follow through to dollar strength here today, guys. And want to start off with Ryan since he's still bearish. He's not here.
No, Ryan is off for 3 days. Dale, good morning, Dale. Good early morning. Good morning, everybody.
Good morning, buddy. So are we getting close to where you want to probe the long side of euro or cable?
Yeah. We are in a bit of a zone here, but then there's in the euro, but then there's a lot going on in the 107 3/4, 108 the figure zone, and yeah, getting tempting. But I'd rather belong a currency that does better with risk on if they get a resolution on the debt ceiling. I'm looking at the one that you were showing just before on that cable. Anywhere low 124s, 124.25 down to 123s. That looks a little bit good for me.
Yeah, it looks better than euro.
Yeah, it does.
All of a sudden, doesn't it? It's got a little wick happening here compared to euro, no wick. And the thing that looks the best right now is look at this moving average on US dollar yen.
Bit counterintuitive, this yen, when people look at the data that came out, because the GDP overachieved, let's put it that way. So that bit of the equation says that perhaps the Bank of Japan is seeing a better reason for doing something soon. So we should hear from Ueda on the back of this after this GDP. But then there's a lot going on with investments in Nikkei topics and fresh investments as well for the fiscal year. It seems that I've been just reading up on that in the past half hour, and that is keeping the yen under the cush. And there is some logic to that. When Japanese stock markets go higher, there is a clear correlation with weaker yen.
Okay.
So I'm a bit cautious. I'm not counter trading this at all.
Yeah.
I must say I'm rather looking at the other side if we get a decent dip lower.
What are yields doing today? Some a shade
they're just
lower.
hanging around there. The short term a bit higher. The 10s are just hanging around, hanging above 350. But the dollar has been doing well this morning. We've set a bit of a low in Aussie, bit of a low in the cable, low in the euro. Yeah. So the dollar is doing pretty okay, and that's likely on the back of better news. Probably step 2 on the debt ceiling, staff level negotiation starting. So that's keeping a bit under the dollar as well, and risk. But it's only the short term really on the dollar curve that went up a bit.
So I wanted to show this because it looked like we were breaking down, but I'd be pretty skeptical about this breakdown right now because it sure didn't put in a big down day. It opened lower and came back all day, and now we're higher, so we're right up against the breakdown line here. Could end up being a false breakdown. And yields come off. So I thought we had a breakdown in S&Ps yesterday. We had this diamond, it started closing underneath it. Now here we are again. I don't know. It looks like it could do either puke or blow off,
or hang around there.
Just continue to compress like this. Yeah,
until we know the finality and what the big boys want to do with the debt ceiling once resolved, or yeah, just hang around there.
I'm skeptical that they have a deal done by the end of the week. I know Stel said, because his mom asked, that they'll have a deal done
end of
in
week,
about 15 minutes.
End of the week or next week is still good, right?
I mean, I think it, makes an appearance of showing good faith of him canceling part of his trip. That the president's really trying to get something done. He lived through the 2011 one. And something back from 2011 is that they felt extorted, and that's why they let it go. So it's really no different. I don't know what Biden's stance was when he was vice president, but he lived through this before in the executive office. So we'll see. I mean, everyone, both parties want to look like they're really trying to get something done. I think neither of them want something done. So, really, I think Trump said, try it, default. Let's see what happens. Okay, so that's, a lot of people supporting him in our government. So we'll see. Yeah, I just can't count it as a done deal. So we had that breakdown in goals. It talked about 2000. Everyone in here should not have been, caught up in this. Is this enough? Stel, is this enough of a correction in silver too? It looks like we're, starting to diverge a little bit on some short-term stuff. I think silver has to reclaim 2450 for me.
Absolutely. That's exactly right.
Okay.
Sorry to interrupt. Sorry, I just agree with you. Agree with you in a big way.
Okay. All right. So in the meantime, you just watch levels and see where this thing goes. Let me ask you, Stel, because you've been pretty good on your macro dollar calls since I've known you. What do you think this is real? That it could have some legs and attack these highs back here. Your longer term charts, what are they saying?
Give me 10 seconds after answer this. I'll be right back.
Okay. What do you think, Kay? Do you think this is turning out to be, like a big base and we're going to come out of here?
I'm back. Sorry. I'm back.
Okay.
So you're asking about the dollar and this move and how far I think it can go. Good question. I am still a seller of rallies in the dollar. I think that this is the kind of I don't want to call it the last hurrah, but I think this is now going to be an intermediate top that we're going to see. How far can it go? I'm looking at 104.
Okay.
Potentially, the 23.6 retracement from the highs in September last year to the lows is at 104.11. There seems to be some interest around the 104 level in general. So I think that's not a bad level to be looking to reverse. Obviously it will it'll hinge on a lot of things, who knows, right? But that's what I think is the most likely scenario, and that's what I'm going to be trading. So if we do get to 104 in the dollar, then I think we should be seeing a bottom somewhere there in metals and
okay,
all the FX crosses and everything.
And do you think that, I mean, 104 is still 150 pips? Can the S&Ps fight it? And here's that diamond. Which way are we coming out of the diamond still? Tried to come out to the downside yesterday. Here's a little shorter term look at it, and now it looks like I either have my lines drawn wrong or anyway, it still looks like a diamond formation.
Is it a diamond? Is it some kind of sideways consolidation? I still think we're going to resolve to the upside, because I do think that the debt ceiling situation is going to be resolved. As you said before, my mother an hour ago came over. Oh, did you know the US are going to default? I'm like, no, it's not really like that. Anyway,
mothers are great contrarian indicators, except you know what? They were right about everything.
That's true.
They're right about everything, even though we think they're wrong about everything. So then we find out, hey, you know what? Mom was right. Anyway, looking at I don't know, we covered bonds, any interest in what oil's done. You know, I have a hard time getting a grip on what to do here after they shook out all the shorts, shook out all the longs, and now we're just moving sideways. I don't have really a view on oil. Do you,
I don't
Stel?
either. It's a very difficult one. You know, whenever I talk about oil on the morning edge, I'm like, yep, moving on to the next one. I really don't know what to do with it. And it's a widow maker, and I really don't want to be taking a view on something that I'm not sure about that can move 5% in a day. So not for me at the moment.
VIX had this pop in late April, you know, this nice little pop, and we've pulled back. The character of it, at least so far, is a nice higher low, and at the lows there was pretty glaring divergence at that last low in late April. So if it's grinding, if it could penetrate this moving average again back over 19.5, it might have, you know, some room to move, maybe get something like this going on. Just notice this, get a little speed line here. Something like this. So that's the way it looks to me. I know. What does it look like? It looks like an EKG of someone in a coma.
Yeah.
Right? So
and isn't it
anyway,
amazing with sorry to interrupt, isn't it amazing that with everything that's happening, all the risks out there, all the, you know, high rates, everything that's happening, and the VIX is still below 20, which is, you know, incredible. Just shows you how complacent the market is, and just how it feels like it wants to keep grinding higher and higher in risk and kind of lower and lower in VIX until it breaks. You know, it always breaks at some point.
Yeah. Okay. Russell, still the weak sister, followed by Dow, and then by S&P, and the champion still is NASDAQ. So here's my look on the, you know, these are like the cues. Looks like a rising wedge to me with attempted throw over. So that's my picture in NASDAQ. This is the way I see it. To me, it's a bearish formation, but, you know, you have to allow, we could get a throw over. If it does that, you know, you just let it go. And then the next time inside is a sell. So I think something similar happened in Bitcoin at the top. And you know what? This sure just proves the correlation between Bitcoin and NASDAQ 100, doesn't it? It looks like the correlation is the opposite, not the same. So just take a quick look. Yeah, Bitcoin's still under pressure. You know, this looks pretty ugly. And are we almost at? I think Greg had a pip in Ethereum looking for 1700.
There's a lot to talk about regulation, and there was a the Treasury Select Committee, I think it was in the UK, who talked about cryptos and said that they should be viewed and regulated or the same way as gambling. So it just shows you how governments think about cryptos now. Are they scared of them, or, you know what? We don't know, but it is. You know, it's not positive. Let's leave it at that. And cryptos are underperforming.
Yeah. So that's, you know, they're acting like there should be risk off, but there isn't yet. Let's see what else.
Hey, you know, I'm getting comments here about my swimming pool, and so I'm gonna go ahead and jump in. How you doing, Dale?
Your what? You're getting comments about?
No, Brent. Mike said I have to in my heated pool. It's heated because it's 100,000 degrees here in where I live. So it's like your pool is bath water, and that's why. So good morning, everybody. How you guys doing? I hear Ryan's off, and he's vacationing at some football match because he's falling.
I've never seen any I've never seen anyone have such a great lifestyle.
I mean, hey, look, I'm gonna become I don't know, I'm gonna become a fan of the Phoenix Cardinal or the Arizona Cardinals, and I'm just gonna travel around the United States, following them around. Is what I'm gonna
Yeah. Gosh. Anyway, so
do. What's that?
anyway, yeah.
Yeah. He's got a great life between Ryan following around footballers and Stelios traveling to every island on in the Aegean Sea.
I'd rather.
These guys live some
I
great
like
lives, don't they?
Stelly. I'll
Yeah.
take Stels.
I'm going to be following like supermodel conventions now. I think that's better.
So, well, there you go. That's actually quite positive.
Yeah,
Hey,
I need a
just
hobby
wanna
too,
say, and this is like
besides
kind of
work.
this is kind of like the conversation. I want to make sure you guys are seeing this stuff, and if you're wondering, this is in our news and research room. I just wanted everybody to kind of see like just some of the positive comments that are coming out of the White House, and you know, the both sides here. And Stel, you should bring up a good point about you know, your mom saying that there's going to be a default. I mean, look, we're going to get past this, and it's looking increasingly sure that at least for right now, we're going to get past the debt ceiling, whether it's an extension for, you know, a few weeks out till, or maybe a couple months out till September, or a few weeks to get past the break. You know, the debt ceiling is going to get raised. You're going to get, you know, concessions. And the question is, what's the market going to do, you know, after that? And what we are seeing is the dollar actually firm up. And I think that's the kind of takeaway here. The dollar index is broken above the 38% retracement. We continue to forge out that the reversal that started last week. And I think that's worth noting, you know, especially if you're a longer term Euro bull, great. I think being a Euro bull is the right place. Being a Euro bull at 108 may not be the best place. You know, maybe being a Euro bull at 105, maybe that's a better place. You know, that the 200-day moving average is not off. I don't think off an unrealistic target for the euro, nor for the dollar index. You know, the 200-day moving average comes up towards, you know, the highs that we saw back in February. So I think those are levels that can be tested in the coming, you know, weeks ahead, especially, you know, if you start thinking about maybe us being a little toppy here around the 4,200 in the S&P level, you know, debt ceiling being raised, getting past that, people, you know, you might get us back into dollars. You know, I think this is a bearish long-term consolidation in the dollar, where we're seeing the dollar, you know, forge out, like I think Stel used to said it earlier, and I agree with you. We're forging out a longer term high in the dollar, but that doesn't mean that the dollar is not going to sit around and be range bound for a while. And I think that's what we're currently seeing. You know, you factor in a couple of things, whether you're talking about, you know, some possible risk selling from 4,300 in the S&P to higher rates to a debt ceiling negotiation, then it probably all, you know, points to a dollar that'll be a little bit higher in over the course of the next couple of weeks, and maybe over the next couple of months. Do you guys have any comments regarding that? Kman, I missed you a little bit earlier. I know you stepped in for Ryan today. You have any comments regarding the dollar?
Yeah, I think we're in a broad range. I think we're in broad ranges, and I don't know where euro is going to stop, but as I said, 107.75 figure is a pretty decent area already.
That's a double top completion. That's the simple technical level, right?
And you've got the cloud is coming into play around here as well, the daily cloud. So that is going to bottom right on that 107.75, which is a trend line as well that I have, and that's going to be important enough. If we ever break there, that's your acceleration probably that you may be looking for. But until it breaks, I'm going to still think that we are in broad ranges. I don't think it can. I don't think it will have the strength to get back up to 111. Right, not now. But I still think in a range. But if you want to counter what's happening in the dollar here, I think there's going to be better currencies than that, because if you talk about risk, for instance, if you say that the debt ceiling resolution is a positive risk event, then stuff like cable or perhaps, I don't know, Kiwi or CAT could hold better, or the Mexican, yeah. On the euro, I'll try to catch a knife, I think, if it comes below 108 for the first time, at least.
All right. Well, good to know. We have in about 10 minutes, we have Adam Button coming on from Forex Live. It's going to be interesting to get his take on the FX market. I always like to listen to what he has to say. So make sure you guys and gals stick around. I think what we should do, Dale, is take a look at like some of these other markets. You see the dollar coming under pressure. I don't know if you guys talked about what's happening in gold, but gold is at lows. I mean, we're breaking down below that.
Yeah.
This channel we've been following literally for the last couple of months, and we're finally starting to break down. Yesterday we pierced it. Now we're below the 618 at 1985. It does look like silver. Gold's going to trade back down towards 1960. I think that's very logical. And if you think in terms of like a little
Back
bit
to the
longer
major
term,
breakout, Blake. What do you think with that big line that you had on the breakout?
I'm sorry. What was your
That
initial
big
question?
line you had on the breakout? There it is. If you extend it out, yeah, and that goes back. I think years back to. I remember that trend line. You took it all the way out to. Oh, okay. So
Yeah,
there.
I think chasing up at all-time highs is kind of scary. I think we'll eventually break out. But right now, I mean, why couldn't we?
Yeah.
Why couldn't the gold trade back below 1900? I think it's very possible, considering how bullish everybody is. It's just one of those asset classes you start looking at. If you are in the camp that the dollar is going to recover, and you're going to see the dollar kind of recover across the board. Let's just say that's how you feel at this point. It would be logical to believe that gold's going to correct as well. Silver might have a little bit more downside. Now, I know both Stelios and Kman probably have some things to say about silver here. You'll see that this trend line, this blue one, this is kind of one that I've got. We're basically testing it right now. That's this one right here. We're getting real close. I know Stelios, you probably have some views on silver. Any thoughts here?
Yeah, I mean, we are at support. We could go lower. We talked about this with Kay on the flow show this morning. There's an area between 21 and 22 which we could reach. I'm perfectly happy with my accumulated long so far. My average is a little bit below here, but could we go lower? Of course, but the medium term view for me is still very, very strong, and I don't mind being long at these levels, even if it means that I go underwater for a bit, because I don't have leverage and I have longer time horizons. But yeah, it depends on the dollar now. It's all driven by the dollar because yields are not doing anything. So it's driven by the dollar, and it's, for me, I like it when something moves when it doesn't make sense, because it means that theoretically the move should eventually go back to some kind of normality. So we saw the dollar rally 1% or whatever it was, and silver's dropped 10, which really doesn't make any sense. So it's all about it got to resistance, so there's going to be some profit taking. There's going to be people who were playing the breakout and now getting stopped. There's going to be stop hunts. There's going to be all sorts of things, which I think eventually are going to reverse. And I think the silver, we're going to be laughing at 20 something prices, a year from now. But you have to be patient, and I am, if anything, I'm patient.
You are, and it doesn't make sense. But you know what doesn't make sense?
What's that?
Bitcoin at 26,000 still doesn't make any sense to me. But it's still, it's there. It's there.
I don't know what to make of that. What's fair value? I don't know.
I'm just kidding. You know, earlier when the show started, I heard Dale and Kman talking about the Nikkei and the dollar yen, and the Nikkei. There's been like massive amounts of inflows into the Japanese markets, and we're approaching. Just so you guys know, we're approaching levels that we haven't seen in 40 years. Let me pull this up really quick, and you know when you think about like the Japan's lost decade, it's actually like a lost, 4 decades, just so we're all, on the same page here. Let me see if I can pull up, let's see, what's the feed that has all the data? I think this is it. Yeah. Okay. People talk about Japan's lost decade. Well, this is the lost decade, right? Basically, from 90 to 2000, lost decade, right? But imagine if you bought here in the late 90s, you have a lost 4 decades and counting. We're approaching levels that we haven't seen since the 90s. And that's where all those massive inflows are coming in. And I think Kman's comments were succinct that when you have a rally in the Nikkei, you get a complementary weakness of yen, and we're seeing the dollar yen push back up towards that 137, 138 level, which I'm not happy about because I happen to have some shorts on right now. But we have to keep that in mind, that there is a strong correlation between Nikkei strength and yen weakness. And so here we are, the dollar yen is back up at the 200-day moving average. You can see the multiple failures up here. But Kman, you were mentioning something about Ueda. Do you feel that he is do you feel that he's changing his tune a little bit? Because I'm not following all of his comments every night.
He didn't change anything so far, but since he's been communicating so well since he started to take office, I do expect him to come out with some sort of comment sooner or later about the better GDP overnight. And let's hope he continues to communicate and tell us exactly his thoughts. But yeah, I've read multiple watchers and analysts saying that now they are getting ready for a June change of tack from the BOJ, whether it be relaxing the YCC a bit, whether it be shortening maturities. There's going to be a few possibilities again, and I expect the market at least from, let's say, a week or so before, unless Ueda really floods the market with comments. I expect the market from, let's say, a week or so before to start speculating again on the yen. Next BOJ is only on the 15th of June, but in a market things can go quickly. So
and we have CPI tomorrow.
And we have CPI,
yeah, Japan. So Japanese CPI is coming out tomorrow. I'm going to just give us a quick view of. We got about 2 minutes before the data comes out. And remember, this is the data flash that comes in ForexAnalytix, so you can just kind of see the data as it's being released right here. And by the way, here's a little plug for what we do at ForexAnalytix. Make sure you check us out, and you get obviously all this analysis between. Gregor was just here, I believe, on Monday. He puts up his Elliott wave analysis for 30 different instruments here. You got harmonic analysis from Andre. You've got all other analysis on these 30 instruments that are updated daily, pretty much, except maybe some of the harmonics, maybe not so much. Every day, because it takes a while for those to develop. You got a lot of different tools here between our internal news flow, calendars, the data flash, but more importantly, you have our chat room, which is it's really the heartbeat of our platform. You got the trades room, when you can see all of the trades that a lot of us are taking. That post in there. Anyway, we got data coming out. I'm just going to manage the US dollar here on a 15-minute chart. See if there's any reaction to the US housing market now. The housing market, just from my point of view, living in the US, we're at a kind of a standstill. Prices are off their highs in like the residential markets, but they're steady because it's a tug of war between people that want to. They don't want to sell. Like you take somebody like myself who's got a mortgage at 2.5%. It's hard to get rid of that as inflation is above my mortgage rate. So it's like you're being paid to hold your loan. So it's, you got people that want to move in and, or people that want to move, but have a hard time people selling. So let's see, building permits
Mixed
are down
numbers.
a little bit. Yeah. Housing starts
Mixed.
are up a bit.
Yeah, roughly
Month over month. Building permits month over month down, and I think that's kind of like the data that might be people will be focused on a little bit more in the future here. So, it's still it's a tough one with the U.S. housing market. I think that we have to be really careful with especially when you're talking residential real estate here in the U.S. We've really leveraged the whole quote unquote trickle down effect over the last 10, 13 years in the markets. A lot of the Fed members, they've really, abided by that theory. And as long as asset prices don't collapse, we're fine. But once assets like home prices start to move down in value, that wealth effect goes in reverse, and then that really starts to impact the consumer. So I think that's what
what would do that, Blake, would be BlackRock, who's already in trouble. They're really the national landlord of America, and they own I don't know how many homes.
Yeah, I mean,
that they rent out. They'd have to puke out their inventory.
And it's just not BlackRock. That's been a big wave in the U.S.
Since
with a lot of private investment firms have come in, and they've put so much money into U.S. real estate, and all it takes is like it's a domino effect. You get one that's like, okay, hey, my investors are clamoring here. We got to start, getting our inventory. And it's not a fast moving market. It's a slow moving ship. So. It's a scary thing if home prices really start to, come under pressure. But again,
not for renters.
It'd be good for renters. That's right. It probably would, especially I don't know about you where you live, Dale, but man, where I live, there's so many new builds of apartment complexes, and it's like, where are all these people going to live? I still,
I know.
I ask that question all the time.
They look like ghost cities. Yeah.
Yeah. So, hey, you guys check out ForexAnalytix, $1, 10 days, jump in our community. It's the water's warm, just like my pool. And that's not from pee, by the way. It's a joke. I hope you guys are laughing. Hey, I know you have Adam Button here.
The other part of the joke is don't pee in my pool. I don't swim in your toilet. Huh? Isn't that it?
That is it. All right, guys. Have a great one. Have a great interview. Adam, welcome to the show. Thanks, Stelios. Thank you, Kman. And thank you, Dale, of course.
And Ryan, hope you're having a good time.
Yeah, he's watching.
Well, we're sweat from our brow every day, keeping the ship up. Anyway, I do hope he's having a good time. Adam, it's always a good time talking to you, partner. What a great time. Well, it's always a great time to talk to you. So welcome back, buddy. Do I have to unmute you?
I'm in there now. Hey, Dale.
Hey, hi. How are you, Adam?
Get the video going here too. I'm doing good. Okay. I'm just back from South Africa.
Yeah, there are a lot of guys.
Wait a second. I'm sorry. First of all, I'm about ready to hit my mute button. Adam, welcome to the show. You're in South Africa. Tell us that the rand is not going to break down.
Wow, man, it's dire there. The electricity problems. I mean,
I was going to say it's got to be crazy. Tell us about it. I'll mute myself.
Yeah, because the guys here, Kman and Blake, have been on the rand. They've been trading.
Is that right? So. Well, you have, I'm an optimistic guy, right? You have a young workforce, a lot of resources, 30-some% unemployment. You should have some money coming into the country, but if you don't have stable electricity, you just can't get inbound investment. Now you would think growth would be like zero without electricity, but somehow this year it's scraping along at flat growth, not declining to nothing. But all the investment right now in South Africa is going into generators and security because crime is so high and electricity is so scarce. So it's tough to get bullish, and I want to get bullish on the whole region, but it'd be other parts of Africa that I'd invest in. that
Did you
are
feel
a little bit
secure
less
when you were down there with you?
No.
Did your whole family go?
I mean, we were in the night. No, just me. It was a 3-day trip, so it was a long way there and back. But even, you know, this is the nicest part of Johannesburg, probably the nicest part of sub-Saharan Africa. But problem is, you go out at night, there's no street lights, right? So it's just scary in any
Wow.
city. No street
Spooky.
lights.
Yeah.
And then, you know, you go out to order an Uber and they're like, don't hold your phone. You know, if you get your phone, don't hold it in front of you. You know, you wait for an Uber to see when it's coming, or you're checking your phone. They're like, hold it against your chest. If you hold it out, someone will just steal it from you. And like, you know, I got there, I was like, I'm going to go for a walk. You know, I've been on a plane for like 20 hours. They're like, no, don't go for a walk. So,
Yeah.
you know, you just see it every, the kids begging and and then you go like indoors, right? And there's the guy with the full-on rifle there, and you're in a mall, and it's the nicest mall you've ever seen. Like, it's the Dior, the Versace, the everything, you know. So there is money there, but you know how it works with corruption. I think at some point when the dollar cracks and the resource markets get going, money has to fight its way into Africa, because it's possible to get the resources out. But and also Rwanda, someone mentioning in the comments, you know, I heard a lot of good things about Zambia, you know, and there if you have less corruption and decent infrastructure, there's a bright future in a lot of places in Africa.
Yeah, the Chinese think so, don't they?
Well, that's, you know, there's a reason. I kept asking, well, why, you know, the question everyone asks is, okay, why is China investing so much in Africa? Well, but the question I'd ask is, why aren't Europe and the United States investing there? And, you know, they kind of feel like they're missing the boat while China's playing the long game.
That's why we don't play the long game.
Yeah, I'm starting to call it now. You know, capitalism is supposed to fix a lot of these problems. And not like, I don't expect anyone to invest in anywhere without electricity, but we're kind of in this area of, like, I call it chicken shit capitalism right now, where, you know, this investors want this like guaranteed 10% return in a safe place, you know, or more. And it's, you know, a lot of it's getting sucked up by technology, and that's fine because the returns have been spectacular. But the way capitalism is supposed to help in Africa and the world is, you know, money flows to places with a pool of labor, with abundant resources, and people take that risk. You know, you're not supposed to make money without taking risk.
Is this really you, or are you AI generated today?
I'm here. Yeah, I'd like to.
Anyway, you know what I really want to also get to, Adam, is the big debate on the turn in the dollar last week. If it's just a little hiccup, or it's going to have legs and even surpass the highs that we put in March over 105. What camp do you fall in?
You know, it's I mentioned that just in the rand, and we need this crack in the dollar, right? And that's the next big trade. It's the next big trade in everything. If gold's going to break out, if resources are going to go, if stocks will bottom, you need the dollar to really crack. You know, the Fed has stopped hiking, right? So that opens the door to that whole trade. But then, you know, retail sales yesterday pretty strong. You know, I just think it's premature to call it the big dog until proven otherwise. And I think, you know, that's one I'd rather be late on than early. You know, I talk a lot about trades.
Okay, so you want some confirmation. What kind of levels would give you that?
Yeah, I wouldn't know if it's the levels for me. Somebody in the Fed talking about cutting. You know, somebody, you know, you can't wait for Powell to tell you they're going to cut or cutting. Now it's late then, but somebody actually talking. And this week it was interesting. They're saying, hey, listen, the market sees cuts, which means the market sees falling inflation, but we don't see that. But the kind of implicit in that is, hey, if that falling inflation does happen, maybe we will cut. I think that was Bostage. Okay. And, you know, that was sort of something along those lines. And that's the kind of thing I'm looking for. And it'll come with economic weakness, which creates all this turmoil at the same time, right? So I think this huge turn in the dollar has to come with volatility. You have to see, you know, at big turns, you see big volatility, and we're not there right now. So when we get some weeks when we have, you know, 6 or 7 handle moves in euro dollar back and forth, then I'd perk up a little bit more. But I'm inclined to think it's more in the second half of the year, or even into the third quarter, or the fourth
What, a
quarter.
recovery in the dollar, not till later in the year? Because you think risk off will happen later in the year. And that'll be
No,
the
I think the
catalyst?
dollar. I think the risk on comes back later in the
Oh,
year.
okay, so,
I think we'll
you know,
see maybe a recovery in the dollar here now. I mean,
Yeah.
that chart right there, that looks like a top, right?
Yeah, and you know, down here is this 101 level where the blue speed line is also right around 61.8 of the whole wave from the lows last fall.
I mean,
Well, I
listen,
mean,
don't
that
underestimate
could
the U.S.
happen.
consumer. The U.S. Well, that's it. Europe looks like it's kind of cracking right now, right? High interest rates. You guys were talking about housing. They don't hit Americans in the same way because
Yeah.
of the 30-year fixed mortgage.
Right.
And so we're seeing the U.S. consumer hold up. Well, we lost
Right.
job losses in the U.K. this week.
Yeah.
The ZEW German business sentiment survey soft. I think we're not done with energy problems in Europe. We'll see next winter. You know,
Yeah, they might be complacent about going into this winter because of how last winter went. They'll have recency bias, and maybe what everyone was afraid of happening this year that
Yeah.
did not.
Yeah, it's weather trade, right? You know,
Yeah.
you don't want to bet on the weather, but it's 50-50 whether it's warmer or colder.
Yeah.
Than
You know, I
average.
did
So,
want to ask you about this. I was thinking about you as I was watching Dr. Copper take a slide.
yeah.
Okay. And that I said, you know, I bet Adam is salivating at this because I know your long view on this market, that you would probably view this pullback as a great buying opportunity in some of the copper miners, et cetera.
Like I have a ton of
am I a
confidence
mind
about
reader?
where copper is going to be in 2026, and it's going to be much higher, right? And so the
Okay.
question is, or even 2025, do you want to
All
be
right.
early or do you want to be late? And it kind of is a measure of your conviction, right? So if I'm early here and it goes back down to 3 or even sub 3,
Yeah.
then I'll buy more. But you know, there's an argument for, okay, well, let's wait. And I think a lot of people are waiting. You talk to people and they say, listen, I want this recession to hit, and then
Yeah,
I'm going to
that's
buy
right.
copper. I'm going to back up the boat. So, you know, that's a fair argument as well for waiting. So I wouldn't say I'm salivating here because I'm as concerned about as everyone else. I don't think there'll be a harsh recession because you have 500 basis points of easing that you can introduce. And you know, that is a huge put in the market, including the copper market. But, you know, China, the data this week was poor.
Yeah.
And you know, half of the world's copper goes to China. So, you know, it's tough to, I'm not backing up the truck here, you
All
know.
right.
I
All right.
like
Well,
it
you
though. I
know,
like
it's
it.
okay. It's okay to change your mind near term. I mean, I'm very bullish on gold and silver long term, but I believe I'm going to have better entries.
Well, it just can't get
might
above
hold.
2070, right?
Yeah.
It just can't do
And
it.
so that covers the copper market. I also know you're kind of an oil aficionado. I can't make heads or tail out of
Well,
what's
it's
happening in
interesting. You mentioned
WTI.
gold and oil. So I think the blowout in oil, there was a fund in Asia that blew up last
Okay.
when it cracked down through, I'm not even sure
Oh
it's showing
yeah.
it there.
Yeah.
That brief,
This.
and that's when gold popped too. So I tend to think they may have also been short gold, long oil, and the whole thing really blew up on them there.
Okay.
And then, you know, you kind of came off of that. Now, yeah, that popped down to 63. I mean, there's a little bit of support there. SPR refill. I mean, I like these levels. I think 70 now is kind of like 50 5 or 6 years ago because of inflation and costs and availability of oil. So, you know, I think the risk reward is pretty good. Again, you see net shorts like in the CFTC data, very bearish setup. I think it's in like the 6th or 7th percentile in the last 10 years on positioning in oil. So it's negative. Seasonals are bullish on oil through June. So lots to like, I think, in the oil setup right now. I do think a lot of the recessionary stuff is overdone, but we're now kind of into the jaws of the slowdown in a lot of the world. So yeah, I don't think it's going to run away unless there's something geopolitical.
Pretty ugly Bitcoin chart. What a difference a month makes.
Yeah, it's hard to find the enthusiasm. I was at this conference in South Africa and it was trading, and I've been to a fair bit of these kind of things. And, there was a time 3 years ago when or whatever it was, all anyone wanted to talk about was Bitcoin and crypto. And there was not a lot of it now.
Yeah.
So that, I think it was a bit of a tell for me that I don't think one person asked me about crypto, to be honest with you. Now it's maybe a different market down there. But there was a lot more talk about gold, but at South Africa, I was in Johannesburg, the city was founded on gold. So maybe that's not surprising, but that, it has had that nice move. And I just think it's a lot of people saying, listen, I wish I would have bought it 20,000 or 19,000. I'm not waiting in here at 26.5. So
I think they'll have their chance. They might have their chance to buy it there again.
That's a lot of things. If we think about this year, stocks too, and it's such a good indicator about where things are going. If everybody's waiting to buy the dip, it never comes. We started out the year talking about recession, right? It was going to be recession. January, are we in recession already? Then February rolls around and it's inflation. Geez, Fed's going to have to go to 6. Then March rolls around and bank failures. Some of the biggest bank failures ever. And you add it all up, the S&P 500's up like 7%, NASDAQ's up almost 20%. And, it climbs the wall of worry. And that it really has been the case this year without a lot of help other than just a steady economy.
Yeah, a lot of sideways grinding. I drew this. I think it might be a diamond top. I'm not an expert on those formations, but I thought that we might be taking out I'll have to adjust my trend line, the triangle here. Let's get to the debt ceiling. I have kind of like usual, different view of what's going to happen here. Do you think that, Biden cut his trip short? McCarthy's saying we could have a deal by the end of the week. You think it's going to get done before June 1st?
I don't know if that's the real deadline. I mean, these guys are such good liars, and they say, oh yeah, it has, but maybe it could be August. I heard some people saying there's some juggling they can do if they can get past certain days. And the debt ceiling has come up 78 times since 1960, and 78 times the US hasn't defaulted. And that is the trend, my friend. And that is the trend.
2011 happened during that trend.
Well, there was a bit of a shutdown there and but the US didn't default on any payment.
We were downgraded.
They were downgraded. And
there was.
And they sent, how much did they end up finding Fitch, or they ended up,
then they went after him. Yeah, then they went after him.
They almost put him out of business.
Yeah.
So nobody's downgrading the US. I mean, that's the reality of the world, is that was crazy. I mean, we talk about corruption in Africa. That's all that was third world levels of retribution. But and nobody's going to downgrade the US again, even if they do default. It's nuts. So
I don't think either of them want a deal. I think I think they both want a default or run well past the X state. So that they think they can blame the other. They think they could blame the other party.
Well, Jamie Dimon will call them both up and say enough is enough, and or Tim Cook or whoever else would say, all right, it's time to stop playing games, and they will.
I mean, you saw that. You saw that manufacturing data yesterday, right? Wasn't that the day before? It was one of the worst in history.
Yeah, it's been volatile. It dropped through the floor, but then industrial production yesterday was strong. So yeah, I mean, manufacturing's weak right now. It really is. But restaurants are strong, so it seems to be kind of balancing out.
Yeah.
I think I'm a buyer of fear. I'm a buyer of panic, and I'm kind of set up just to wait. Let's see this get worse, and if something pukes, I'll be there.
Yeah, there really hasn't been any panic anywhere, to the upside or to the downside. Kind of a quiet period. But I think this dollar rally could have legs, and it'll be the least embraced dollar rally.
Well, that's what I said. Like, that's what I mean. I think the dollar has room to run kind of in this quarter, next quarter, and then you get a big turn in Q4. And you're right. But listen, the setup all year has been the U.S. consumer is going to be stronger. It just has more capacity, more pent up savings, 30-year mortgage, and you'll see consumers elsewhere crack on mortgages because they feel it directly. And you know, if that comes with risk aversion, I'm not entirely sure. You know, Japan, obviously we got worked up about a new governor and it looks like the same playbook for now. So that looks like it's ready to break. Euro dollar looks like it's double topped. You know, there's a bit of optimism about sterling, but the data lately has been soft there. And, you know, Aussie, again, you're worried about China data. So there's not a lot of places I lean against the dollar strength, that's for sure.
Okay.
That
Best
could crack.
idea for the summer. Adam.
Idea for the summer.
And is it nothing? Is it just be tactical and scalp? You know, you don't have to have like, you know, a home run ball or a double or extra base hit.
You know, it's tough to see a lot of conviction right now. It's tough to really get it. You know, you have the Fed kind of up in the air. You have the dollar. Listen, that could be the dollar. Gold looks like it's top, but I'm not going to sell gold. So you're kind of on the sidelines there because, you know, the central banks are buying.
I like this level, 1840-ish.
Yeah.
This is going to be what the people are going to buy into this 1920-ish. But I think that we will see prints under 1900 in the gold.
Someone asking about buying euro. I'd be a seller of the euro, if anything.
Seller of the euro. You know, I think that this may have been the whole wave, Adam.
You know, it's interesting. You guys were talking about real estate. I think real estate is. I'm a buyer of real estate. I think it is proving to be pretty resilient. It hasn't cracked yet. People need houses. There aren't enough.
You can't live in your trading platform.
It's a supply trade, not a rates trade. And I know people buying houses in the US right now, they're saying, listen, I know I'm paying whatever it is, 5.5%, but I'll just refi. Like I'll take the pain for 2 years and refi. And, you know, then the builders have cut back and the immigrants are still coming. So I'm a buyer of some of the real estate is really getting cooked right now. Okay. I think that's pretty good opportunity.
We need BlackRock to puke up all the houses they bought up. Huh?
I mean, commercial real estate, maybe office real estate. I mean, I'm not brave enough to wade into those waters.
Yeah.
But you know, residential real estate, some commercial. But that America's so overbuilt on malls and whatnot. That scares me.
So what do you think of the banks? You know, I've been reading that half of them are undercapitalized right now.
I'm a buyer of fear. This hold to maturity, it's so philosophically difficult, right? Because they're underwater, but they can hold it as long as the deposits don't flee. But it's pretty easy to start a bank run. And you saw it in PacWest again, saying 10% of bank deposits left. So, you know, there was a time, it was very tempting last week. So a weekly, weekly 2 weeks ago, when they were really puked down, and you're looking at, I don't know if it was PacWest or whatever, trading at 250, and it made, I think, $1.20 the year before, and you're thinking, even without deposits, like, geez, that's just getting real cheap. But you think they're just going to end up as zombies, right? Like no money's going to come in. The money slowly trickles out. Nobody can buy them. JP Morgan said they're done buying. So I guess Bank of America's got a bit of a hold to maturity problem. City, they'll blow it. So I don't, but what's more of a question for me is it negative? Is there a lot of, is it going to bring down the whole market again? Does it matter in the macro picture now? Maybe it still does, because
credit conditions will tighten for businesses.
Okay, on that side for sure. But maybe not that much either. I mean, there's some arguing it's worth 25 basis points. Others were arguing it's worth 100. And then you see the tightening. Fed, of tightening. So, I don't think the Fed's hiking anymore, though. So that to me is, but, the market's priced in 50, 60 basis points of cuts by year end. How confident am I that that's coming? not that confident. I mean,
Yeah.
a lot of that's tail risk, right? I think people look at that curve and say, well, the market's pricing it here, but really you have the market, so it's pricing it coming down, but really you have half the market pricing it here, and then you have, which is no change, and then half the market, we're not half, pricing that they might cut by 300 basis points because it's Bank of America in trouble, right? So you, and it ends up showing 50, but the path isn't 50. It's either like 100 or 200 or nothing. And that is kind of a weighted probability. And I think that's the way to look at it, rather than the Fed's wrong or the market's wrong. But, you know, they're not, I think what I'm listening for from them is talk about recession, right? How much they don't want a recession. Because they kind of say, well, we could tolerate a mild recession, and Powell saying no recession at all. You know, so what, when they are looking at a recession, are they going to say, no, we need to fight inflation and kill inflation? Or say, listen, I don't want to be the guy who caused inflation and then caused a brutal recession and was slow on both and go down as maybe the worst central banker ever. I mean, he's kind of teetering in that direction right now. And these guys, they think about their legacy. So he needs a win.
You know, Adam, don't you think he knew all the banks were loaded up with the stuff that they were directed to buy, you know, to play the game with the central bank, and you know, the old saying that you know, keep doing it till something breaks, and something broke, and he still raised a quarter. So, to me, it's starting to look intentional. Could it be the Fed's game to want to get rid of all the competition, let his buddies like Jamie come in and buy assets cheap, and then there's only maybe a few major banks left as we move into not the treasury digital dollar, but the central bank digital currency? Why is it not coming from the treasury like all our currency has during our whole history? It doesn't say treasury
Yeah, well, the Fed doesn't
digital
seem that-
currency. It says central bank. Is this a hostile
Back one.
takeover of the
I mean, that is
treasury
a
by the Fed?
few steps away. I mean, I'm not going to
Huh?
weep for the death of regional banks. Like, they're still banks. I mean,
Yeah.
they're not the little guy. It's not some little community bank. Maybe the ones with 3 branches, sure. But
Oh, I thought it was like in that one in the Jimmy Stewart movie.
like, it's a place to keep your
Yeah.
money. And I don't understand why anybody uses a regional bank, or they don't pay any interest. I mean, maybe
Yeah.
the service is really good and they rub your feet when you bring your money in. But if I moved to the United States, we write to JP Morgan or whoever. I don't, but maybe I'm missing something there. But for me, the Fed, you know, you look at the history of the last 30 years of America, which have been very good for America. And most of that a lot of that is low rates. You know, the power of low interest rates and keeping inflation low, it's remarkable. It really is unbelievable. You don't have that in South Africa. You don't have that in a lot of places in the world where you really have guaranteed low inflation. And, you know, the investing and borrowing that goes on when you have very low inflation and low rates, it benefits everyone. And the Fed is right about that. And they would rather, I think, theoretically have a recession and guarantee that the rest of the decade is low rates than not. But now I think when they're actually in it, they'll panic and cut rates and maybe cause more inflation. But looking good, Dale.
There's Mario Draghi playing lead guitar. He's still busy out there doing
still got
riffs for Italy. So anyway,
but I mean, I'm
you know what? This is
and then
very
I think
good.
AI. I think the Fed though looks at AI and says it is deflation. We heard Druckenmiller last week talking about it. It is so deflationary. So I think at some point they have confidence that inflation isn't going to be a decade-long problem. And maybe that's misplaced, but I believe it too. And so they'll cut.
Well,
and
if
we have low
AI
inflation.
destroys
And
humanity, like Musk says, there
a-
should be
you
there
see, it
should
was
be lots of
BCA.
goods. Lots
The
of
BCA report
deflation.
comes out. The first bullet point of the BCA report, I can't remember what it was the regular stuff. Second bullet point, we think there's a 50-50 chance that AI destroys humanity in 420. Wow, maybe we should have put that as the first one, boys. But
anyway, I know I could use a little artificial intelligence as mine diminishes. And you know, you bring it every time you're here, Adam. So again, kind of a low conviction environment, and we're not even into the dog days of summer.
Yeah, it's stuff will come up. I mean, the debt ceiling trade right now is just a buyer of panic. That's an easy peasy. I'm leaning into
Yeah.
oil a little bit, copper producers,
right.
if you can hang on.
Yeah.
And then dollar longs. I mean, you're on
Yeah,
it,
I like
Dale.
that dollar long. Yeah.
And
All right.
it's still the greatest economy in the history of the world.
So check out Adam on Twitter at FX_button at Forex Live, and what him and Greg do over there. And Adam's really has his finger on the pulse of news events. Any big news events you're looking forward to trading coming up here?
I'm off for a few days starting tomorrow. I'm going fishing, Dale.
Oh,
So
all
I'm
right.
looking forward to pulling a few big fish. The fishing season opens here Saturday, so
All right,
I'm going
buddy.
up
What do you
north
go?
to-
What are you going for up there?
a walleye is the fish up
Oh,
there. So
any northern pikes up there?
yeah, we
That's
got a
it.
lot of big snakes up there. We
All
call them
right.
jackfish. So
Oh well, man, you know, recharge. Anyone who could do a 3-day trip to Johannesburg needs to recharge their battery.
at
So-
FX button will be FX_button will be a fishing Twitter starting on Saturday for a few days.
Oh, all right, man. Well, you know, may you fill your nets and have a great time, buddy.
Thank you very much.
Adam Button, everyone, follow him at
FX.
Adam_FX Button, and check out what he does at Forex Live. Adam's one of the better ones out there. Thank you, buddy, for stepping up and being with us today. Appreciate it.
Have a nice day.
All right. My trading warrior brother, Adam Button. I hope you guys enjoyed him. Could join the team in 14 minutes for the morning edge, and I'll see everyone tomorrow. Adios. You're welcome, Patrick.